Now, both the S&P 500 and the Dow are down by negative 0.5%, whereas the Nasdaq is down over 1%, which I would presume that it's coming from the article we just recently read of saying that the Fed could increase the interest rate by 50 basis points on the upcoming FOMC, which is set to take place beginning of May. So they indicated that interest rate could go up by 50 basis points if the inflation remains this high. So this is something that we are yet to see, but they are indicating that should inflation continue to be this high, then definitely they are going to increase, or we might have to prepare ourselves for the 50 basis point interest rate hike beginning of May. So before we dive deep into a topic, please note that this video is just for entertainment purposes and it's not a professional financial advice video, and I would really appreciate if you can hit that likes button as it helps with the YouTube algorithm. So as previously announced by the Fed in March, they increased their interest rates by 25 basis points, of which so many analysts believed that throughout this whole year, in the next 6 meetings which are set to take place this year, the Fed will be increasing, or chances are high that the Fed will probably continue increasing these interest rates by 25 basis points. And the fact that yesterday there was an article that came yesterday and said that the Fed in this upcoming FOMC, which are set to take place early May, they are looking at increasing the interest rate by 0.5%. It's sort of like a bit of a shock, as so many analysts, like I'm saying, they were anticipating that we might see 25 basis point throughout the year. Now this, of course, 50 basis point, the Fed indicated that of course they are doing this because the high inflation that we are seeing in the US, which is something that I think they don't have any choice, because we are seeing high inflation in the US. I mean, the cost of living for the period which ended in February of 2022, or for the 12 months which ended in February 2022, we saw the cost of living going up 7.9%, which it is this high, or it has never been this high for the past 40 years, which it is a serious concern, which is why I would definitely understand, oh, it's something that the Fed sort of like don't have a choice, but they need to rise this interest rate at a much faster pace to try to cover, or to try to at least curb this high inflation number. And of course, to those that might still not know what low interest does, what they basically do is that they are able to give consumers an opportunity to go in and loan money, whether it's to buy a car, or to buy a house, and to buy probably luxury items in their houses, those that they've been wanting to buy. So they're able to take credit. These low interest rates encourage a lot of consumers in the US to go take a lot of debt, which then resulted in the prices of those houses, those cars, and the other products to go high, which now it is resulting in, of course, inflation, or it's one of the things that is resulting in inflation. Now this is a concern, and this is something that the Fed has to increase interest rate hikes so that at least they can sort of like slow down the way these prices are going up. Though these are also affect growth stocks in the stock market. I mean, if you look at one of the company or one of the stocks that we discuss a lot on this channel, like SoFi, consumers won't be able to go loan money in institutions like SoFi because they will be afraid of these high interest rates. When you look at a company like also Neo, consumers won't be going that much. Yes, they will still be going to buy cars, but they won't be going that much when comparing to the days when these interest rates was almost at zero, which is something that, of course, for the growth stocks is going to hurt. When this high, or when interest rates goes up, it definitely hurts most of the growth stocks, which is something that you must bear in mind, or which is something that you are definitely going to see hurt the stock market as this happens. So, but this, or the good thing that, of course, the Fed had said is that they had indicated that, of course, they are planning to raise these interest rates in a way that will not hurt the stock market that much. But of course, with these high inflation rates, they are forced, or they have no choice but to raise these interest rates at bigger or much bigger basis points that probably they predicted. Now, another thing that is adding some fuel on this high inflation in the US is the Russia-Ukraine war, because you remember that countries like Russia, they are the biggest exporter of oil and grains, which is something that, of course, because they are not supplying those as they should, is definitely going to make the prices of oil and grains to go up. So the prices of food basically are going to go up, which when those prices go up, of course the inflation then yet again is going to go up, which we all know that that will also result in much more higher inflation, which of course then now the Fed do not want, which is why they are planning, or they are saying that in the next coming FOMC meeting, which is set to take place early May, we might see them actually starting to rise, or rising in interest rate by 50 basis points. Now this of course is going to hurt the markets. This of course is something that I think as an investor you need to brace yourself, because we don't know how the market will react to that. But I believe, or I personally would think, that chances are the market might not like that at all. And the bad thing also is that they will be starting to reduce their balance sheet of $9.5 trillion starting from May, which that again, it's not a good thing to us, the investors. But of course, these interest rate hikes, I personally believe that it's a short-term thing, and one way or the other, this thing has always been, or we have seen interest rate hikes impacting the stock market even in the past, but we have always seen the stock market recovering after that. So yes, in the short term, these high interest rates that the Fed might come and impose is definitely going to, or might definitely affect the stock market. But in the future, the stocks, or these top quality stocks, will always recover. There's no doubt about that. So yes, in the short term, we, or you and me, might definitely be affected by this, but in the longer term, I definitely think that this stock, as we've been seeing based on history, they are still going to recover, which is something that I think it should give you hope. And instead of panicking during these times, you ought to probably be taking the opportunities in some of the dips that you are seeing in the market, and probably load the boat, because when these stocks, or when those indexes recover, we are going to see some retail investors, or investors making some good money. So hang in there and take these low trading prices that we might be seeing, or take these dips that we might be seeing in the market as an opportunity for you to probably load the boat, because one way or the other, the markets are going to recover. So should we continue seeing inflation being this high, then the Fed is definitely going to consider increasing the interest rate by 50 basis points, which, like I said, I think it, though to others it might cause a lot of panic, or to some investors might cause a lot of panic, to others I think you ought to take the good opportunity and probably go in for those top quality stocks that you've always wanted to buy, because chances are they are going to drop in terms of the share price. I mean, already we are seeing the market reacting to those headlines, which is something that might just has to show you that we might see the stock market probably dragging down as we head towards the 4th of May. We might see the stock market, those stocks that you like, especially the growth stocks, dropping down quite sharply, which will offer good opportunity to an investor like me and you to probably, like I said, load the boat on those stocks. Otherwise, I just thought I should just do this quick video and give you the updates on what you might have to expect in the stock market going further. As to if the stock market will crash due to this, well, nobody knows, but I definitely know that it is going to impact the stocks probably in the short term. But in the long term, all these stocks, or these quality stocks, will always recover, which is something that must give you hope based on the history that we've seen previous years. Otherwise, with all that, guys, I make tons and tons of stock market investing videos, and if you think that this video was amazing, please don't forget to hit that likes button, comment, and like I said, if you have not subscribed to the channel already, please do subscribe so that you don't miss the good content that we produce on this channel. Otherwise, before you load the boat, whether it's on a stock, whether it's on an ETF / index fund, please do make sure that you do your own due diligence, so that at least you can be comfortable when you are investing in the stock market. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.